Our next lecture is on pecuniary insurance. This type of insurance involves the intangible risks, those related to income, revenue, or value. Examples of such policies catering for these risks are money insurance, fidelity guarantee insurance, legal expenses, credit insurance, and business interruption. Money insurance. This type of policy caters for any fortuitous loss of money, either in transit or on the premises. This includes the private residence of the insured. Money insurance covers the insured for money on the premises during or outside office hours, or also in the private residence of the insured. Furthermore, money is covered during the course of transportation, like for example when money is taken to or from a bank, and inside the premises of the bank. There are various extensions under this policy, the most important being the personal accident extension, which includes cover for serious injuries sustained by employees during an assault. Fidelity guarantee insurance is cover for theft by insiders, typically losses suffered by the employer through the dishonesty or fraud of the employees. This policy is underwritten on an individual named basis or on a blanket basis, which covers all employees of the insured. Legal expenses insurance is a policy catering for costs and expenses to sue or defend a case before the courts. Such expenses include legal costs, witnesses' reports, professional fees, and the like. It is not the liability that we are insuring in this case. It is not the award given by the judge, but merely the expenses associated with the court case. Credit insurance is a policy which caters for the debts that are not paid by the debtor by a stipulated date. An insurance policy will cover for the non-payment of a debtor, of course having the right to make a recovery from the debtor. Business interruption, formerly known as loss of profits or consequential loss insurance, is a policy which caters for the loss of profits following a material damage loss. If the premises of the insured is damaged and the material damage policy caters for this loss, then the business interruption policy will be triggered and pays for loss of earnings, fixed overheads, or any other increased costs as a result of this loss. The policy is subject to a limit and to an indemnity period. There could be situations where the damage or loss occurred is not on the premises of the insured, but on the premises of a supplier, for example, or a customer, or in transit. These can be catered for by an extension. Furthermore, if there is loss by which access is prevented or failure of public utilities like gas, water, and electricity, or if there is disease, vermin, insanity, murder, or suicide in the neighborhood or on the premises of the insured, then these are all situations that can cause consequential loss and that can be catered for by the business interruption policy subject to the taking of an extension.